What's up, everyone? It's Scotty with MoneyVest. So today we are going to be talking about Vertex Pharmaceutical, ticker symbol VRTX, and this is a stock that's been one of the companies that I personally invested in 2021 when the stock was pretty much selling off very aggressively despite the markets doing really well. And that trend reversed in 2022. In fact, Vertex was one of the companies that saved me tremendously in 2022 because it was a pretty sizable position in my portfolio. And of course, it's more than doubled since then. And I did exit my position. And now I think it's time for us to recircle this company because it's done really well. And it's still pretty much trading at an all-time high. Very, very strong and profitable biotech company. So it's going to be an updated analysis on this stock. I hope you guys enjoy it, find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel, and links to our Discord and Patreon is going to be down below if you're interested in joining, and of course getting access to all the members only benefits, including members only videos. And of course we got the intrinsic value spreadsheets, the volatility cheat sheet, S&P 500 valuations. There's going to be a lot of stuff, including the trading view charts. Everything's going to be included with that 16% annual discount, so links are going to be in the description. So Vertex Pharmaceutical, pretty much trading at an all-time high. $378 per share is where we are. A little bit of a doji candle here on the day, but all-time high sits at $387 per share with a market cap of just under $100 billion for the company. It's a company based out of Massachusetts that focuses very much on cystic fibrosis, and we have again done a lot of analysis on this company. We talked about how in the 180s, 190s, this was one of the best biotech stocks in my opinion. And since then, of course, the stock's done really well, more than doubled to about 107% gain to trading as much as 375, 380. Now, they reported earnings for the third quarter 2023 more recently. So total CF product revenue. Trikafta is one of their best-selling products in North America, and that generated revenues of $2.27 billion, and that's up from a little bit over $2 billion same time last year. So that is again about good 10% growth here. And we're looking at other CF products, about a $209 million here for the company. So overall, revenues for the third quarter for CF coming in at around 2.48, so just under $2.5 billion. All the expenses, so combined non-GAAP R&D, acquired IP R&D, and SG&A expenses, just under $1 billion, slightly higher from same time last year. And non-GAAP operating income was a little bit lower from 1.3 to 1.17. Operating margins also declining a little bit from 55% to 47% for the company. And non-GAAP net income was slightly higher, so from 1.04 to 1.06. And EPS also higher because the company also has been, I think, recently doing a little bit of share buybacks as well. So $4 increasing to $4.08 for the company, with cash and cash equivalents very, very strong, sitting at over $13.6 billion. So the company does have a lot of cash relative to the debt on the balance sheet. In fact, they do have more cash than debt on the balance sheet, so they've got a negative net debt position on the balance sheet. Now, this right here is the current fiscal year 2023 guidance. They're expecting revenues of about $9.85 billion, which has been updated from the previous guidance they provided, and includes expectations in the U.S. for continued performance of Trikafta. Like I said, this is one of their best products out there, and the launch of Trikafta in the age groups of 2 to 5 years old, as well as the continued uptake of Trikafta in multiple countries internationally as well. So expanding globally into other parts of the world. And this right here are some of the other projects that they are working on with Moderna. You know, we've got Concert, we got CRISPR Therapeutics, we got Semma Therapeutics for sickle cell disease, we got beta thalassemia, we got pain, we got type 1 diabetes, all these different things that they are working on with all these other manufacturers for biotech, right? So again, very, very significant positions in these in these markets. And we've also got a very nice margin of 61%, with net margins at just under 36%, and levered free cash flow margins of 38% for the company, with a very strong return on capital, equity, and assets as well. And net income per employee is about $700,000, which is slightly lower than the 5-year average. So the company has maybe become slightly less efficient in the process over the last 5 years, but nonetheless, very strong margins here. And valuation is, I would say, okay. It's not super expensive, but it's also not cheap where it would be like an insane no-brainer buy in my opinion. So we have to kind of assess that in just a minute. But 25, 26 times earnings is where it's at. Price to sales a little bit over 8.9, close to 9, and price to cash flow sitting at just under 24, and enterprise value to EBITDA sitting at just over 17 to 18 times at the moment. Now this right here is the growth expectations. Now Vertex Pharmaceutical is expected to continue to grow in the mid to high single digits. 9 to 10% is what we're looking at, from $14.93 all the way up to $30, $31 per share. And this right here has been the historical numbers. So fundamentals, financials of the company have been very strong. That's exactly one of the reasons which attracted me towards Vertex Pharmaceutical in the first place, is because the numbers were so good for this company. Operating income also moving in the right direction. And this right here, net income, also very, very nice growth here over the last 3 to 4 years. They've gone from like 263 million, 1.1 billion to now over 3.3, 3.4 billion dollars. And shares outstanding have been moderately, very, very moderately going higher over the years, but earnings per share also very nice growth. And they've gone from like $8 to as much as $13, $14 per share for the business. Now, balance sheet, as I mentioned, $11.2, $11.3 billion, now over $13 billion in cash, with the total debt sitting at under $1 billion for the company. So we're looking at a very strong negative net debt of -11, -12, and we're looking at current ratio, quick ratio, absolutely phenomenal at over 3 and 4, and debt to free cash flow at 1.34. So again, very, very strong numbers for this company. And this right here is the forecasted earnings in the mid single digits to high single digits. 7 to 8% is what we are looking for the company. So if we come back over to the Vertex's discounted earnings multiple model, and we assume that the company is going to be, generating a net income of, let's say, $3.5 billion this year. So we plug that number in, and we're looking at, let's say, a 10% growth rate for the business and a 20 times P multiple with a 12% discount rate, 10% margin of safety, and no share dilution and no share buybacks. We're looking at an intrinsic value of $223 per share, which obviously does mean that the company would need to drop about 41% in order for it to be trading at its intrinsic value calculated by me. Now, this right here is the sensitivity grid. Now, again, you can kind of see that, okay, if Vertex Pharmaceutical right now is trading at $370 something, right? So that's exactly where it is, $378 right now. So we are looking at somewhere over here. This is exactly the price. So it's trading, based on the assumption that it's going to grow at 16% over the next 5 years in terms of earnings, and trading at a 26 times multiple. That's exactly where the price is today, based on the P multiples that I showed you earlier. But I don't believe that they're going to be able to grow at 16%, right? As great of a company as it is, I don't think Vertex can grow at 16% earnings for the next 5 years. I think that's going to be a little bit more difficult. And I think that's exactly why I'm willing to go with a 10% growth rate, and that lowers their intrinsic value. Even if you go with, let's say, 26 times P multiple, exactly where it's trading right now with a 10% growth rate, then the intrinsic value sits at just under 290. But I also think the PEG ratio is going to be a little bit dislocated with a 26 times earnings multiple and a 10% growth rate. So we need to align that as much as possible. And for those reasons, the estimated intrinsic value sits at $223. If you go with a free cash flow number, and let's just assume they're going to be doing $3.5 billion also in free cash flows. And if you try to match these numbers, let's just put in 27%, or let's do 28, let's do 30%. There we go. So 29 is going to be that number. So they would need to grow free cash flows by 29% for the next 5 years in order to justify today's valuation based on the discounted cash flow model. If we assume that they're going to grow cash flows by, let's say, 20%, 272, but I'm going to be more closer to 14 to 16% free cash flow growth, and that is going to once again require a 38 to 40% pullback for Vertex Pharmaceutical, putting us down to 234, in line with what we have over here, almost at 223. So 225, 230 is going to be that level where I would be a lot more interested once again in Vertex Pharmaceutical. But of course, we're not there yet, and that's one of the reasons why I no longer have this position. And this right here is the overall technicals, where it's consistently trading in this higher high and higher low pattern, where we are very nicely pushing up, making very nice higher highs, higher lows. But like I said, it is getting to a point where the valuation relative to the growth rates moving forward is a little bit more on the higher side. So I would be a lot more interested. Like I said, sub 230 would be the ideal place where I would start to look into this stock once again. So some support levels I want to point out: 247, 250s. And we've got another support level, very strong support level over here, 280s, 290s. Those right there are going to be few support levels to obviously pay attention to for Vertex Pharmaceutical. So let me know your thoughts down in the comment section below, and what do you think about this company? And are you still holding from our previous analysis? And what are your thoughts? What are you planning to do? As always, if you enjoyed this video, find it helpful, make sure that you drop a like. Don't forget to subscribe to the channel. Link to our Discord and Patreon is going to be down below. There is a 16% annual discount that we just started once again and it's going to expire before the end of this month. So links are going to be down below. As always, happy investing. I'll see you all in the next video.